Avinash Gorakshakar, Head of Research, Profitmart Securities, joins me this morning. Avinash, good morning. Thank you for being here with us on News 9. Well, the question I wanted to ask you today was if the 80,000 levels on Sensex would sustain, and it seems that markets had other plans for the day.
Yeah, good morning, Kartik. I think clearly markets are now going to be a little slow in moving up at least initially, because I think whatever has happened in Kashmir, I think the markets are clearly aware that in the next few days or weeks, some retaliatory action could be taken, and I think this is definitely something which was not expected at all. It has come as a big negative surprise for the markets. So for the time being, I think the markets would consolidate or may see a moderate kind of sell-off, because for the last 7 to 8 days also markets had rallied significantly. So some part of profit booking and some part of a cautionary kind of buying phase could be seen in the markets. But overall, I think one thing is very clear, that now the tariff issue seems to have got resolved. We could be possibly looking at some other geopolitical factors, because tariffs are going to be more or less settled by the month of September. So I think net, Kartik, the markets today would definitely be a little cautious, and whatever news flows come from the government as to how they are going to actually handle this issue is going to be very critical. So till that time, I think markets could get a small speed breaker, and some profit booking could be seen, maybe today, tomorrow.
I'm just a little confused because US markets closed significantly higher yesterday, and usually there is a fairly coupled graph that can be plotted between what happens in the US and what happens in the rest of the world. But today, the fact that markets have opened softer, down about 0.2%, the broad indices in the morning, despite more than 2% gains in the US, that means the fear in the markets is fairly high, and that fear seems to be perhaps more, like you mentioned, more linked to what India's response to Pakistan would be. How much of this fear would you attribute to that, and how much of it would be other factors?
No, I think clearly almost 90% of the fear could be attributed to yesterday's development in Kashmir, Kartik, because as you rightly mentioned that, the global markets going up, the dollar index coming down, FI flows coming back, and the rupee stabilizing. These are all positive factors, and numbers which have come out in quarter 4 for most of the corporates have been slightly better than expectations. So I think, net, you're right. I mean, in case this issue was not to happen, I think the markets today would have opened on a strong note. I think there's no doubt about it. But I think this factor is now something which has come like a big negative surprise. And I think this is definitely something which now nobody in the markets expected. So I think now going forward, it would be a little hazy as of now. But yes, I think longer term, the structural Indian story is looking very, very positive. I think we have been telling our clients that the markets have more or less bottomed out. The panic in the market is out. So over a period of some time, this issue would be also be resolved, and markets would definitely again start moving upwards.
All right. You also mentioned that because we've seen 7 straight sessions of gains, there could be some profit taking happening in trade this morning. Is it fair to assume that if profit taking is one of the reasons which is getting the markets to open lower and trade lower in early trade, then in the second half of the day, we could see some buying action as well?
Yeah, you could. I think, see, because my guess is that FIs have been now steadily buying in the cash market side, and I think a lot of domestic mutual funds, despite the overall number becoming showing negative, I think there have been a lot of good buying happening in good quality stocks, because valuations are definitely now looking attractive. I think one has to see what kind of numbers come in the April to June quarter, Kartik, but at least on a date basis like this, I think maybe in the second half, obviously you could see some sort of buying coming in.
Right, hopefully some buying could come in the second half. But I want to draw your attention specifically to the energy sector, and energy sector seems to be reeling under some pressure this morning. ONGC is down more than 1%. Reliance is down about 0.7% in trade right now. Avinash, could this also be a response to what J.D. Vance had expressed while he was in India, saying that India must up its energy imports from the US? Is that something which could be playing in on energy stocks, that we may be cutting back on the cheaper Russian oil and losing some sort of our dependence on the OPEC region, and we may be coaxed into buying Russian oil? I beg your pardon, US oil?
No, I think, Kartik, this is definitely not a reason where markets would possibly be a little apprehensive on how India decides its buying strategy for crude. See, I think very clearly India has followed a very strong diplomatic and a friendly approach to US, and I think the US market is also aware that India is a very large market, specifically for technology, for defense. So my sense is I think we'll have to wait for some time before we actually conclude on this factor, whether India buys oil from the US or whether it buys from Russia or the other OPEC countries. But nevertheless, the kind of buying seen in the oil, marketing companies, in the upstream companies was pretty sharp. So here also some profit booking could come in because at $65 dollars an average for crude, I think most of the oil marketing companies had moved up, considering that their GRMs could also improve. So some sort of profit booking was expected. So this is nothing to panic.
To panic. Well, that is a word of reassurance coming in. I want to specifically now draw your attention to the IT sector, and the IT sector, which is completely linked to what happens in the US and maybe relatively less impacted by way of what happens between India and Pakistan as and when it does. Of course, we have seen the tensions build, at least diplomatically, but we haven't really seen anything or heard anything on the military front just until now. But Avinash, on the IT sector specifically, results have been fairly decent. HCL yesterday rallied about 7%, so I understand that particular stock could be taking in some profits in trade this morning. But beyond that, the other companies, the big five in the IT space, also reeling under some sort of a pressure. Why is that so?
No, I think, see, if you see the quarterly numbers, Kartik, obviously, is HCL Tech, as you rightly pointed out, their numbers were much better than other companies like TCS, Infosys, Wipro. And I think the factor which actually helped the stock move up was the guidance. I think unlike Infosys, which, guided for a negative growth, Wipro also downgraded its guidance for FY26. I think markets want some sort of visibility for growth. And I think that was very clear from the management commentary of HCL Tech. Overall, I think we'll have to probably wait for another 1 or 2 quarters before we see some sort of large order wins from the US market, which is a large market for Indian companies. We are positive, Karthik, on the smaller companies. Persistent has come out with good numbers. KPIT Technologies is another company. So I think maybe in the larger companies, it may take a little more time for the order win cycle to actually crystallize into numbers. So we are positive on the sector. This is a sector where you would definitely find India a very large kind of partner to the US. But maybe in terms of earnings numbers, you'll have to wait for a couple of quarters. So we are structurally positive, but we would be positive on stocks like Persistent and KPIT.
Right, Persistent and KPIT are some of the positive stocks coming in from Avinash. Avinash, I also want to understand from you what happens to the mood, not just of the Indian investors, but even foreign money that potentially could flow into India or could be paused from coming into India in the wake of potential escalation between India and Pakistan. How will foreign investors react to an escalation if it happens?
No, I think my guess is that foreign investors have got complete faith in the current government, and I think even yesterday after this event happened, there were a lot of condolence messages sent to the Prime Minister, stating that this event was definitely not something which most of the countries had liked, and most importantly, I think the markets are definitely going to be volatile. No one likes escalation in the relationships of any country. But I think FIs would also observe these factors very closely. Maybe they could pause for a few weeks. But I think nevertheless, the India story is very large. And I think the currency has now stabilized. That itself is a very big indicator that, they can't ignore India as a growth market. So I think, with the tariff issue going on, I think India is now one of those markets where everybody wants to come and invest in India because growth is plenty. And I think we have a very good structural policy to encourage investment. So I think net short term, yes, the trend could be little affected, but longer term, I am not worried. I think this thing will also go away.
All right. I'm not sure, Avinash, if you have a view on gold or not, but that is again a commodity which has been making headlines last many days. So I want to get your view on gold specifically now that prices have come, at least in dollar terms, off lows. It was once at about $3,500. It is now down to about $3,300 per ounce. And gold, as we know, is calculated in USD. The dollar index is weak. The Indian currency then becomes a little more palatable to purchase gold at more reasonable prices. But in that context, we've seen the gold rally also at some level lose its sheen. Now, do you believe this is the buy on dips opportunity for gold, or you think gold prices could correct even further down from here?
No, I think, see, clearly, till the time the tariff issue is not resolved and, there's uncertainty, on this major issue, I think gold will continue to rise because gold has clearly risen because of this factor, because uncertainty has been very high. And I think, for investors who want to buy gold, I think this is definitely looking to be an expensive kind of level. the gold price has moved quite significantly. But I think obviously for traders, they could enjoy the volatility and make some momentum gains here. But I think from a industry perspective, I think the gold jewelry companies, Kartik, could be in a problem because for them the main raw material gold is going to be expensive, and I think passing through this cost immediately in totality to the customers is not going to be an easy task. On the other hand, gold finance companies in India like Muthoot or Manappuram, they could possibly be beneficiaries because the loan to value improves, and I think demand for the gold finance market in India is quite healthy. So I think net, I would say that somebody who has already bought gold can hang on, but fresh buying at these levels, I think one has to be little careful because clearly the markets would be very volatile going forward.
All right. And I also want to understand from you, Avinash, I'll take this opportunity while you're here with us that hypothetically, whatever Donald Trump does is likely to be in the interest of his America First policy, is likely to have a positive impact on the US markets, barring, of course, that probability of US going into recession. Is it a good time, given the uncertainty in India with respect to how tensions could escalate? Is this a good time for Indian investors to also dabble into US stocks?
So I think clearly, somebody who has already invested in the Indian asset class in a big way and wants to diversify could definitely look at some of the US companies because, see, my sense is Donald Trump would not make a blunder to ensure that the US economy goes into a recession. He has already started negotiating with most of the trading countries, and I think some solution will be worked out. So to that extent, I think one can take a small bet on some of the larger US companies. And I think clearly, of course, the return expectations have to be moderate because unlike emerging markets like India, there the risk reward could be relatively lower.
Right, the risk reward as compared to India could be lower. That's the view coming in on the US stock markets and Indian investors who may be looking into dabbling in US stocks. So stock selection is going to be critical. That is the word coming in from Avinash Gorakshakar. Meanwhile, the Indian stock markets have recovered. So Avinash, could this have then just been a case of profit taking in early trade? Sensex is now pretty much flat, back to yesterday's level of about 80,150. Meanwhile, Nifty 50 is also up. Second decimal points, but up nonetheless. The mood of the market has changed in the first 20 minutes or so of markets opening. Nifty 50 at 24,352 levels. Volatility has also eased. We started the day with about 3% higher on volatility. It's now down to about 2.17 if my eyes are helping me right. So Avinash, could it have just been a case of great gains over 7 days? Let's make some money and put the money back into the markets.
No, I think, see, clearly the markets are confident that the present government would obviously take a very decisive call against this, this issue which happened yesterday. And I think, see, markets are obviously going to be slaves of earnings. So I think, barring this factor, and now the markets have understood that global challenges would continue to remain. I think India and most of the other countries will have to live with tariffs. And I think India is a very well positioned, strong, growing market. So I think, ultimately, you make money from stocks, and if you get stocks at reasonably good valuations, I think money flow is going to come in. So I think what we saw in the morning was a little bit of panic, but I think markets have settled down. And I think unless some major event happens, which could possibly trigger a further escalation between India and Pakistan, then only I think markets would correct significantly. So till that time, I think the markets have realized that it's better to be positive, and any dip is being used as a opportunity to accumulate.
All right. And Avinash, I will get your view on Aether Energy as well, which is coming up with its IPO. In fact, Aether Energy driving into the IPO game, becoming this year's first EV maker to hit the public market. Now, the issue will be open for subscription from April 28th to April 30th, with anchor bidding kicking off tomorrow, April 25th. Now, the company has priced an issue in the range of 304 to 321 rupees per share, looking to raise as much as 2,600 crore rupees in a fresh issue. Founders Tarun Mehta and Swapnil Jain are cashing out a total of 19.6 lakh shares between them, 9.8 lakh shares each, and looking at walking out with 15x returns or so, which could help them pocket a cool 31 crore rupees. Aether Energy, Avinash, any view on this company? We've seen what has happened with Ola Electric. This is a new company coming in the same category. What would you recommend to those who want to go ahead and subscribe to this IPO?
Well, I think clearly, Kartik, this is a IPO meant for very high risk investors because, as you rightly mentioned, this is not a profit making company. It still has a loss making kind of trajectory. And I think the product is well established. There's no doubt about it. The promoter background is very good. But in this market, when the existing promoters want to cash out, and obviously these valuations are not cheap, I think they are fair to expensive. At least looking at the current numbers, of course, the future is positive. My sense is that somebody who wants a momentum gain could try a little bit in this IPO, but somebody who's looking to invest in this IPO should keep away. It's better to wait for the IPO to list in the secondary market, understand how the company's operations are. Then you get to hear the management commentary. And I think looking at Ola Electric, I think it's clearly very well understood that these kind of new generation companies, will take a little bit of time to stabilize and generate cash flow. So at least new investors who want to invest money should keep away. Maybe people who want a listing gain could try their luck.
All right, investors to stay away. Listing gains may go and opt. Avinash, Gorakshakar, always a pleasure having you here on News 9. Thank you for joining us.